Based on the provided data, a potential strategy for investing in Bitcoin is to wait for a pullback towards the support level of 78,600. The RSI is currently hovering around oversold levels, suggesting potential for a rebound. A long position could be initiated when the price touches the support level, with a stop-loss placed below the recent lows around 77,500. The initial target price could be set at the resistance level of 86,000, representing a potential 10% gain. The Bollinger Bands indicate a potential for volatility in the coming week, with the price potentially breaking out of the current range. If the price moves above the upper Bollinger Band, it could signal a strong bullish move and the stop-loss could be moved up to secure profits. Conversely, if the price breaks below the lower Bollinger Band, it could indicate a reversal and the position should be closed to avoid further losses. This strategy aims to capitalize on the potential for a short-term rebound while managing risk through a tight stop-loss and well-defined profit targets. Based on the provided data, Bitcoin Cash appears to be in an upward trend. The historical price data shows a consistent increase, with the price breaking above the resistance level of $410 in the middle of the period. The forecast data also suggests continued upward momentum. A potential strategy could involve entering a long position at the current market price, with a stop-loss order placed at $331, the identified support level. The target price could be set at $355, based on the forecast data and the recent price action. This strategy leverages the identified upward trend and utilizes the support level as a risk management tool. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below support levels and failing to break through resistance. The forecast data also suggests a continuation of this downtrend. Therefore, a short position strategy is recommended. An entry price could be placed around 0.627, the recent low point. The stop-loss should be set at 0.648, slightly above the recent high. The target price could be set at 0.582, the identified support level. This strategy utilizes the downtrend and support level to maximize potential returns while minimizing risk. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI, while showing some fluctuations, remains below 40, indicating a bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential breakout in either direction. However, given the overall trend and the predicted price decline, a bearish strategy is more likely to be successful. Therefore, a recommended position strategy is to short Ethereum at the entry price of $1,860, with a stop-loss price of $1,920 and a target price of $1,570. This strategy leverages the predicted downtrend and the support level at $1,860. The stop-loss price is set slightly above the entry price to limit potential losses. The target price is based on the forecast data and the potential for further price decline. Based on the provided data, XRP shows a volatile but generally upward trend. The historical price data, coupled with the forecast suggesting a slight dip followed by a potential uptrend, indicates a possible bullish outlook. Support at $2.03 provides a solid base, while resistance at $2.32 presents a potential hurdle. A suitable strategy could involve entering a long position at $2.16, close price on March 12, a dip potentially offering a good entry point. The stop-loss should be set at $2.03, the strong support level, limiting potential losses. The target price could be set at $2.32, the resistance level, aiming for a potential 8% gain. This strategy leverages the RSI, entering a position when it dips below 40, indicating potential oversold conditions. Additionally, the Bollinger Bands suggest a potential price breakout, further supporting the bullish outlook. Based on the historical and forecast data, Binance Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. The support price of $532 provides a potential buying opportunity. A long position could be initiated at the support level of $532 with a stop-loss order placed at $525 to limit potential losses. The target price for this trade could be set at $580, which represents a potential upside of approximately 9%. This strategy combines the potential for a rebound from the support level with the predicted short-term upward movement in the forecast. Based on the provided data, Stellar appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. Support levels are crucial in this scenario, with the price finding temporary support at 0.242. A buy strategy could be initiated at the 0.242 support level. A stop-loss order should be placed at 0.239, below the recent support level, to limit potential losses. The target price could be set at 0.265, representing a potential upside of 7.8%. The RSI indicator also supports this strategy. The RSI has been hovering below 40, indicating oversold conditions. A potential bounce from the oversold level could drive the price towards the target. However, it's important to note that the Bollinger Bands suggest a continuation of the downtrend. The price is currently trading below the middle band, and the bands are narrowing, indicating a potential for a breakout in either direction. Ultimately, the most efficient strategy combines the support-based entry, the oversold RSI signal, and the potential breakout scenario, making a cautious long position with a tight stop-loss a viable option. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $2.53 on several occasions. The forecast data also suggests a continued downward movement in the coming week. Therefore, a bearish strategy is recommended. A suitable entry point would be at the support level of $2.53. The stop-loss order should be placed above the recent high, around $2.75, to limit potential losses. The target price could be set at $2.32, which aligns with the forecast low for the week. This strategy utilizes the support level as a potential buying opportunity, while the stop-loss and target prices are based on technical indicators and the forecast data. Based on the provided historical and forecast data, Cardano appears to be in a fluctuating sideways trend. The price has bounced between support and resistance levels, with recent dips towards the support level of 0.673. The forecast data suggests a potential upward movement in the coming week, with prices expected to hover around the 0.70 to 0.75 range. Considering the RSI, the current value is around 46.5, indicating that the asset is not overbought or oversold. A long position could be initiated if the price breaks above the resistance level of 0.82, with an entry price at 0.825. The stop-loss should be placed below the recent support level at 0.673, and the target price could be set at 0.90, aiming for a potential profit of 9.7%. Based on the provided data, Litecoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The support price at $87.7 suggests a potential bounce, but the overall trend suggests a bearish outlook. Therefore, a short position strategy is recommended. Enter a short position at the current price of $90.6. Set a stop-loss order at $94.7 to limit potential losses. The target price is set at $87.7, the support level. This strategy utilizes the downtrend and support level to potentially generate profits. Based on the provided data, Swaycoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast data suggests this trend will continue. The RSI is hovering below 40, indicating oversold conditions. However, the price is approaching the strong support level of $2.1, which could act as a potential buying opportunity. Therefore, a long position could be considered with an entry price around $2.1. The stop-loss price should be set below the support level, at $2.05, to limit potential losses. The target price could be set at $2.5, representing a potential upside of 20%. This strategy combines the oversold RSI signal with the potential support bounce, aiming to capitalize on a potential short-term reversal. Based on the provided data, Aptos appears to be in a downtrend. Historical prices show a consistent decline, supported by the forecast prices which predict further drops. The RSI, while fluctuating, remains below the overbought level of 80 and has dipped below 40 on several occasions, suggesting potential oversold conditions. The Bollinger Bands show narrowing bands, indicating a potential decrease in volatility. A suitable strategy could involve a short position entry at the next significant support level, around $5.20. A stop-loss order should be placed above the recent high of $5.44 to minimize potential losses. The target price could be set at $4.76, aligning with the lowest forecast price. This strategy capitalizes on the downtrend and potential oversold conditions, while managing risk through a tight stop-loss. Based on the provided data, SE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. Support and resistance levels further indicate a bearish outlook, with the resistance at 0.215 acting as a significant barrier. RSI readings consistently hover below 50, confirming the downtrend and suggesting potential for further declines. Bollinger Bands are narrowing, indicating a potential for a breakout in either direction, but the overall downtrend suggests a more likely bearish breakout. Therefore, a strategy based on this analysis would involve a short position. Enter a short position at 0.193, the first forecast price. Set a stop-loss order at 0.188, the previous day's high, limiting potential losses. Target the first significant support level at 0.182 for a potential profit. This strategy capitalizes on the prevailing downtrend and utilizes technical indicators to identify entry and exit points. Close the position when the price reaches the target or the stop-loss is triggered. Based on the historical and forecast data provided, Ethereum Classic appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. The support price at $16.9 acts as a potential floor, while the resistance price at $18.6 presents a significant hurdle for upward price action. Considering these factors, a bearish strategy could be implemented. A potential entry point would be around $17.9, the projected price for March 13th. A stop-loss order should be placed at $18.6, aiming to limit potential losses if the price unexpectedly surges. The target price could be set at $16.9, the identified support level, with the expectation of a continued downtrend. This strategy leverages the identified downtrend and support level, aiming for a relatively conservative risk-reward profile. Based on the provided historical and forecast data, Polygon appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support price of $0.205 acts as a potential floor for the price, but the resistance at $0.246 suggests difficulty in breaking upwards. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $0.215, close to the predicted low on March 13th. The stop-loss order should be placed above the recent swing high at $0.246 to limit potential losses. The target price could be set at $0.18, aligning with the predicted lows in the forecast data. This strategy leverages the downtrend and uses technical indicators to identify potential entry and exit points. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The RSI indicator is consistently below 50, further supporting the bearish sentiment. Considering these factors, a short position is recommended. Enter a short position at the market price around 0.114. Set a stop-loss order at 0.126 to limit potential losses. Aim for a target price of 0.0967, which aligns with the forecast data and the downtrend. This strategy leverages the bearish momentum and potential for further price decline. Based on the provided data, optimism appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI indicator is hovering around oversold territory, indicating potential for a short-term bounce, but the overall trend remains bearish. Therefore, a short position is recommended. Enter the trade at the market price around 0.855, with a stop-loss order placed at 0.877, above the recent high and the next resistance level. The target price is set at 0.744, which aligns with the forecast low and represents a significant downside potential. This strategy leverages the bearish trend and the oversold RSI, aiming for a substantial profit while managing risk effectively. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.146 multiple times. The forecast data also indicates a continuation of this downtrend. Therefore, a bearish strategy is recommended. A suitable entry point would be at $0.159, the first forecast price. The stop-loss order should be placed at $0.168, slightly above the recent high. The target price could be set at $0.146, the strong support level. This strategy leverages the downtrend and aims to capture potential price decline. Based on the provided historical and forecast data, Solana appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast indicates further downward movement in the coming week. The support price of $118 suggests a potential floor for the price, while the resistance price of $139 indicates a level that may be difficult to overcome. A potential strategy could involve entering a short position when the price approaches the resistance level of $139. The stop-loss order could be placed at $141 to limit potential losses. The target price could be set at $118, the support level, aiming for a profit of $21. This strategy utilizes the trend and support/resistance levels to identify potential entry and exit points. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data projecting further downward movement. The RSI indicator is consistently below 50, indicating bearish sentiment. The Bollinger Bands are also narrowing, suggesting a potential for a breakout in either direction. Given these factors, a short position could be considered. A suitable entry price would be around 0.518, the recent support level. The stop-loss should be set above the recent high of 0.576, aiming to limit potential losses. The target price could be set at 0.482, the long-term support level. This strategy leverages the downtrend and potential for a breakout to the downside. Based on the provided data, Render appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding at around $2.74. Looking at the forecast data, prices are expected to continue falling over the next week. Considering this, a short position could be taken. A suitable entry price would be around $3.02, with a stop-loss set at $3.14 to limit potential losses. The target price could be set at $2.51, which represents a significant downside move based on the forecast. The RSI indicator is currently hovering around 30, suggesting the asset is oversold. However, it's important to note that the RSI has been in oversold territory for several days, and a bounce back is possible. The Bollinger Bands show narrowing price action, indicating a potential breakout in either direction. Given the overall downtrend, a breakout below the lower Bollinger Band could confirm the bearish outlook and further justify the short position. Ultimately, the most efficient strategy would be a combination of the trend analysis, RSI oversold conditions, and the potential breakout below the lower Bollinger Band. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below the support level of $0.102 on several occasions. The forecast price also suggests a further decline in the coming week. Therefore, a bearish strategy is recommended. We can enter a short position at the market price when the price touches the resistance level of $0.114. The stop-loss order should be placed at $0.117 to limit potential losses. The target price can be set at $0.102, which is the strong support level. The RSI indicator is currently below 30, suggesting that the asset is oversold. However, we should wait for a confirmation signal from the price action before entering a short position. The Bollinger Bands are also suggesting a downtrend, with the price trading below the middle band and the lower band narrowing. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. The RSI is currently below 30, indicating oversold conditions. Therefore, a potential entry point could be around 0.166, the predicted price for March 13th. A stop-loss order should be placed at 0.155, the identified support price, to limit potential losses. The target price could be set at 0.141, the predicted price for March 16th, aiming to capitalize on the continuation of the downtrend. The strategy utilizes the RSI and Bollinger Bands to identify potential entry and exit points. The RSI suggests an oversold condition, increasing the likelihood of a price rebound. However, the price action within the Bollinger Bands indicates a potential continuation of the downtrend. Therefore, the strategy combines these signals to identify a potential entry point at 0.166 with a stop-loss at 0.155 and a target price of 0.141. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, with the price consistently trading below the previous day's close. The forecast data further reinforces this downtrend, predicting a continued decline in price over the next week. Considering the RSI, which indicates overbought or oversold conditions, the current RSI level of 41.2 suggests the asset is not currently overbought. However, the historical data shows periods of oversold conditions below 30. Therefore, a strategy could involve entering a short position when the price drops below the support level of $0.0000680. The stop-loss could be set at $70.06 to limit potential losses, while the target price could be set at $0.0000560, based on the predicted low for the week. This strategy utilizes both the trend and RSI to identify potential entry and exit points. Based on the provided data, SHIB appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The support price of $0.0000115 offers a potential buying opportunity. A long position could be initiated at $0.0000117 with a stop-loss order placed at $0.0000115 to limit potential losses. The initial target price could be set at $0.0000111, aligning with the forecast data and allowing for a small profit. The RSI indicator is currently at 30.8, suggesting that the asset is oversold. A potential entry point could be when the RSI crosses above 30, indicating a possible reversal in the downtrend. The Bollinger Bands show that the price is trading near the lower band, which could signal a potential bounce. However, it's important to note that the price action is still within a downtrend, so caution should be exercised. A combination of these indicators, along with the support level and forecast data, suggests a potential for a short-term rebound, but the overall trend remains bearish. Based on the provided data, DOG-COIN appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, hovering below 50, supports this bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a breakout in either direction, but given the overall trend, a downside breakout is more likely. Therefore, a suitable strategy would be to enter a short position when the price breaks below the support level of $0.43. The stop-loss order should be placed above the recent high at $0.45, limiting potential losses. The target price could be set at $0.37, based on the forecast data and the downtrend. This strategy capitalizes on the prevailing bearish momentum and aims to profit from a potential further decline in the price of dog with hat. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting a continuation of this trend. The RSI indicator is also below 50, indicating bearish momentum. A position strategy could involve short selling Doge-Coin at the current market price of $0.00205. The stop-loss order should be placed at $0.00217, above the recent high, to limit potential losses. The target price could be set at $0.00183, based on the forecast data and the support level of $0.00197. The Bollinger Bands further support this bearish outlook, as the price is currently trading near the lower band, suggesting potential for further downward movement. Additionally, the RSI is hovering near oversold levels, indicating a potential for a short-term bounce. However, the overall trend remains downward, and a short position with a tight stop-loss and a realistic target price offers a potentially profitable opportunity. Based on the provided data, Near Protocol appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast data suggesting further downward movement in the coming week. The RSI indicates that the asset is not oversold, but it's hovering near neutral levels. The Bollinger Bands show that the price is trading below the middle band, further supporting the bearish outlook. Given these observations, a short position strategy is recommended. Enter a short position at the current market price of $2.57. Set a stop-loss order at $2.82, which is the recent resistance level. The target price for this trade is $2.18, based on the forecast data for March 16, 2025. This strategy aims to capitalize on the potential downside movement of Near Protocol while managing risk with a defined stop-loss. Based on the provided historical and forecast data, Internet Computer appears to be in a downtrend. The price has been steadily declining over the past 2 weeks and the forecast predicts further downward movement. The support price of $5.1 provides a potential floor for the price, but the resistance price of $6.04 suggests that upward movement is unlikely in the near term. Considering these factors, a suitable strategy would be to initiate a short position when the price reaches $5.45, the closing price on March 12. The stop-loss order should be placed at $5.6, aiming to limit potential losses. The target price for this trade could be set at $4.9, aligning with the projected price decline. This strategy leverages the downtrend and utilizes the support and resistance levels to define entry, stop-loss, and target prices. Based on the provided historical and forecast data, Injective appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding around $8.81. The forecast data suggests this downtrend may continue, with prices potentially falling below $8.81 in the coming week. Given this outlook, a short position could be considered. A suitable entry point for a short position would be around $9.15, the predicted price for March 13. The stop-loss order should be placed at $9.68, the highest predicted price in the forecast period. The target price could be set at $7.28, the lowest predicted price, aiming for a potential profit of approximately 21%. This strategy leverages the potential for continued price decline, with risk management measures in place to limit potential losses. BTC appears to be in a downtrend based on the historical price data, with a clear decline from February 27 to March 12. This downtrend is further supported by the forecast data, which predicts continued price declines through March 19. The RSI, while fluctuating, generally remains below 50, indicating bearish sentiment. Considering these factors, a short position strategy is recommended. Enter a short position at the market price on March 13th, with a stop-loss order placed at 247, the forecast high for that day, and a target price of 200. This target price is based on a conservative estimate of a further 20% decline from the March 12th close. The stop-loss is set to limit potential losses if the market unexpectedly rallies. This strategy leverages the identified downtrend and uses technical indicators to manage risk. Based on the provided data, THETA network appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $0.815 in the last week. The forecast data also predicts a continued decline in the coming week. Therefore, a short position strategy is recommended. A suitable entry price would be around $0.86, the predicted price for March 13th. The stop-loss price should be set at $0.90 to limit potential losses. The target price could be $0.70, based on the forecast data and the current downtrend. This strategy utilizes the predicted price decline and sets risk management parameters to protect potential losses. Based on the provided data, WorldCoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with support holding at 0.756. The forecast data suggests this downtrend is likely to continue, with prices predicted to fall below 0.756 in the coming week. A short position could be taken with an entry price at 0.802, the opening price on March 13th. A stop-loss order should be placed at 0.841, the high for March 13th, to limit potential losses. The target price for this trade could be 0.677, the predicted price for March 16th. The RSI indicator supports this bearish outlook, as it has been below 40 for most of the past 2 weeks, indicating oversold conditions. However, the Bollinger Bands suggest potential for volatility. The price has been trading near the lower band, indicating potential for a bounce. Therefore, a stop-loss order at 0.841 provides a buffer against a short-term price reversal. The overall strategy favors a short position based on the downtrend and oversold RSI, but with a stop-loss in place to manage risk. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of 0.129 on several occasions. The forecast data also indicates further downward movement in the coming week. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around 0.137, the first forecast price. The stop-loss order should be placed above the recent high of 0.163, at 0.165 to limit potential losses. The target price could be set at 0.117, the lowest forecast price, aiming for a potential profit of approximately 15%. This strategy incorporates both the downtrend analysis and the RSI indicator, which suggests potential oversold conditions in the coming days. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of $0.461 on multiple occasions. The forecast data also predicts a continued downward movement for the coming week. Considering these factors, a bearish position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $0.461. Set a stop-loss order at $0.482, which is the recent resistance level. The target price for this trade is $0.371, the lowest predicted price in the forecast data. This strategy combines the trend analysis, support and resistance levels, and the bearish forecast to maximize potential returns while managing risk. Based on the provided historical and forecast data, Polkadot appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support level at $3.87 is crucial, and a break below this level could signal a more significant decline. Given this trend, a short position could be considered. A potential entry price would be around $4.05, with a stop-loss order placed at $4.15 to limit potential losses. The target price could be set at $3.75, aiming to capture a potential 7% return. It is important to note that this is just a suggestion, and traders should always conduct their own research and risk management before making any investment decisions. Based on the provided historical and forecast data, Filecoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with the support level at $2.65 holding firm. The forecast suggests further price decline in the coming week, reaching as low as $2.42. Therefore, a short position is recommended. Enter a short position at the current market price, which is $2.75. Set a stop-loss order at $2.8 to limit potential losses. The initial target price is $2.65, aligning with a strong support level. If the downtrend continues, adjust the target price to $2.42, the lowest forecast price. Based on the provided data, Conflux appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator consistently remains below 50, indicating bearish sentiment. The Bollinger Bands are also narrowing, suggesting a potential for a breakout in either direction. Therefore, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at 0.0819, the highest point in the last week's forecast data, and a target price of 0.0652, the lowest point in the last week's forecast data. This strategy capitalizes on the anticipated downtrend and aims to profit from the predicted price decline. Based on the provided historical and forecast data, Ethereum name service appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast predicts further decline in the coming week. The support price at $16.4 suggests a potential floor for the price, while the resistance at $20.2 indicates a significant hurdle for upward movement. Considering these factors, a short position strategy is recommended. Enter a short position at the market price when the price is near the resistance level of $20.2. Set a stop-loss order at $16.4, the support level, to limit potential losses. The target price for this trade could be $13, based on the forecast data and the downtrend. This strategy leverages the potential for further price decline while managing risk with a defined stop-loss. Based on the provided data, Avalanche appears to be in a downtrend. The historical prices show a consistent decline, with the forecast prices also indicating a continuation of this trend. The RSI is hovering around the neutral level, suggesting a potential for further downward movement. Considering these factors, a short position could be initiated at the current price of around $17.5. The stop-loss order should be placed at $18.5 to limit potential losses. The target price could be set at $15, aiming to capitalize on the predicted downtrend. This strategy combines the bearish trend observation with the RSI's neutral positioning. Based on the provided data, Bitcoin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data indicating further downward movement. The RSI suggests that the asset is not oversold, hovering around the neutral level. The Bollinger Bands indicate a tightening range, suggesting potential for a breakout in either direction. A short position could be considered with an entry price around 0.0248, the recent low. A stop-loss order should be placed above the recent high at 0.0268 to limit potential losses. The target price could be set at 0.0226, the support level identified in the data. Alternatively, a long position could be considered if the price breaks above the resistance level of 0.0268. Entry would be triggered upon a confirmed breakout above this level, with a stop-loss placed below the recent low at 0.0248. The target price could be set at 0.029, based on the previous resistance level. However, given the overall downtrend, the short position strategy appears to be more risk-reward favorable in this scenario. Based on the provided data, PENDLE appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping below the support level of $1.91. The forecast data also suggests a continuation of this downtrend in the coming week. Therefore, a bearish strategy is recommended. A short position can be entered at the market price when the price reaches $2.08, with a stop-loss order placed at $2.13 to limit potential losses. The target price for this trade is set at $1.74, which aligns with the lowest forecast price in the provided data. This strategy leverages the downtrend and the RSI indicator, which is currently below 30, suggesting oversold conditions. Additionally, the price is approaching the lower Bollinger Band, indicating a potential for further downward movement. Based on the provided data, the sandbox appears to be in a downtrend. The historical price action shows a consistent decline, and the forecast prices suggest further downward movement. The support level at $0.259 provides a potential buying opportunity. The RSI indicator is currently hovering around 30, indicating oversold conditions. Therefore, a long position could be considered with an entry price at $0.259, a stop-loss order placed at $0.255 to limit potential losses, and a target price of $0.295, aiming to capture a potential upward move. This strategy combines the oversold RSI signal with the support level, and the target price is chosen based on a reasonable profit target considering the overall downtrend. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering below the resistance level of $0.285. The forecast data also suggests a continued downward trend. Considering these factors, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order set at $0.285, the resistance level, and a target price of $0.242, the lowest forecast price. The RSI indicator is currently below 40, suggesting the asset is oversold. However, the Bollinger Bands are narrowing, indicating a potential period of consolidation before further price movement. This strategy capitalizes on the current downtrend while managing risk with a tight stop-loss order. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price dipping below the support level of $0.0851 several times. The forecast data also suggests a continued downward movement. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be around $0.0912, the first forecast price. The stop-loss order should be placed above the recent swing high at $0.0997 to limit potential losses. The target price could be set at $0.0851, the support level, aiming to capture a significant portion of the anticipated decline. This strategy incorporates both the trend analysis and the support level as key indicators. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling support and resistance levels. The forecast data further reinforces this bearish outlook with predicted prices continuing to decrease. Considering the RSI, we can identify potential buy opportunities when the indicator falls below 20, indicating oversold conditions. Conversely, selling opportunities arise when the RSI exceeds 80, signaling overbought conditions. The Bollinger Bands suggest that price movements are becoming more volatile. A strategy could involve entering a short position when the price breaks below the lower Bollinger Band, with a stop-loss order placed slightly above the recent swing high. The target price could be set at a level where the downtrend is expected to reverse, or at the next significant support level. Based on the provided historical and forecast data, Chainlink appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further decline in the coming week. The support price of $12.7 offers a potential entry point for a short position. A stop-loss order should be placed above the recent high at $14.4 to limit potential losses. The target price could be set at $11.3, which aligns with the forecast low for the week. Combining this trend analysis with RSI and Bollinger Bands, the strategy becomes more robust. The RSI is currently below 30, indicating oversold conditions. However, the price action is still within the Bollinger Bands, suggesting the potential for a bounce. Therefore, a cautious approach is recommended, waiting for a confirmation signal such as a bounce off the support level and a bullish crossover of the RSI above 30 before entering a short position. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a general decline over the 2 weeks, with the forecast data suggesting further price drops in the coming week. The support price of $174 is consistently tested, indicating a potential floor for the price. However, the RSI and Bollinger Bands suggest a potential for further downside movement. Considering these factors, a short position strategy is recommended. Enter a short position at the market price around $178. Set a stop-loss order at $181 to limit potential losses. The target price for this trade is $155, based on the forecast data and the downtrend. This strategy leverages the potential for further price decline while managing risk through a tight stop-loss order. Based on the historical and forecast data, EOS appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with a forecast indicating further downward movement in the coming week. The support price of 0.46 acts as a potential floor, but the RSI, hovering around 35, suggests that the cryptocurrency may be oversold. A long position could be considered with an entry price at 0.46, a stop-loss at 0.45, and a target price at 0.49. The RSI strategy supports this position as it is currently below the oversold level of 20. However, the Bollinger Bands show price action is contracting, indicating potential for a breakout in either direction. Considering the overall downtrend, the long position with a stop-loss at 0.45 acts as a risk management tool to protect against further downward movement. The target price of 0.49 is based on a moderate upward reversal, taking into account the potential for a bounce off the support level. Based on the provided historical and forecast data, Tron appears to be in a slight downtrend. The price has been hovering around the support level of $0.212, with the forecast indicating a further decline in the coming week. Considering this trend, a short position could be considered. A suitable entry price for a short position would be around $0.227, with a stop-loss order placed at $0.231 to limit potential losses. The target price for this trade could be set at $0.212, aligning with the support level. This strategy utilizes the current downtrend and support level as key factors in determining entry, stop-loss, and target prices. Based on the provided data, Suncoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting further downward movement. The support price of $0.016 is holding, indicating potential buying pressure, but the overall trend remains bearish. A potential strategy could involve a short position with an entry price at $0.0165, slightly above the current support level. The stop-loss order should be placed at $0.0168, the recent resistance level, limiting potential losses. The target price could be set at $0.0155, aligning with the forecast price and offering a reasonable profit margin. This strategy leverages the bearish trend and uses technical indicators like support and resistance levels to define entry and exit points.